You're looking well, Paul.
Yes, you are. I was just thinking that. Yeah.
You're looking thinner.
Thank you. Well, I have been exercising. Anyway, the streaming's underway. So we're going to be talking about a fascinating subject today. On my Facebook page, I put up a poll. Do people trust banks? And what do you think the percentage of people said that they didn't trust banks were? Adrian, Sally, any guess?
Oh, I'd have to be 80 or 90% of people wouldn't trust banks for sure.
Yeah. So it was actually 100%. Now,
okay, out of your poll.
I don't have the biggest group in the world, but it's a lot of people don't trust banks. And this is what we're going to talk about today is about the three of us have read this book called Banking Secrets Exposed, which is really telling us why the banks are the criminals that they are, basically. And so we're going to explore this today with three different viewpoints and see what comes out of this. So, thanks, Adrian. So, welcome, Adrian, and welcome, Sally. How are you two?
Good. I'm excited about the topic today. It's I'd be very interested to see your views on it all.
All right. Well, the book was called Banking. Sorry, Adrian. I didn't say hi, Adrian.
Hi, it's great to be with you guys. And of course, in Australia, we don't trust anyone with authority, do we? It wouldn't be just banks, it'd be governments, councils, anybody they don't know.
But particularly with our money, Adrian. When it comes
Of
to our money,
course.
it's a whole nother level.
Well, I mean, if you want to go down the government and the council parts, this could be another discussion we can have, because I totally agree with you. I've come across a lot of research suggesting that the local government is actually not local government. It's a proprietary limited companies. Anyway, we're going off target, off track over there. So I suppose what I'll do is I just get, firstly, what was your general impression of the book? I'll start with Sally, since ladies first.
Oh, well, just generally it made sense. It was a bit of an eye-opener because you had alluded over a number of weeks when we were chatting about what is really going on and how we're in debt and who we're in debt to. And so you said, I've got a document that you should check out. So you sent me this document a couple of weeks ago. And look, I'm all about the energy of things and understanding that, money came from, bartering from an exchange. It was an energy exchange, if you like, but it was an exchange of goods and services for other goods and services. And then just going down the rabbit hole of discovering how banks gone about and the idea of, loans and debts and interest payments and all that sort of thing. It was an eye-opener to me. So I like to keep things basic, and I can see how a basic idea of just exchange then has been amplified, and then greed came into it, and then smoke and mirrors and the deception and the lies and things. I mean, it makes it for a great movie, but unfortunately it's true life.
And that's the thing, is it is true life. And we're going to explore how it came into being, the barter system, the fraud, the lies, all of these things that banks perpetuate on us. And this is one of the reasons why society is falling apart, is because we all know in the back of our head that there's something not quite right. And we just don't know what it is. And all this book was research from people that, I know the two people that did the research of the books. There was Mike and another guy. And what they did is, together, they fought everything they could in the courts. So they understand the law better than lawyers do. And actually, lawyers will actually come and listen to their arguments in the law courts to actually find out what arguments they're going to use, because lawyers generally are just administrators. They don't actually know law that well. What was your general impression of the book?
When I first started reading the book, I thought, okay, this is a little bit going into conspiracy theory. But actually, by the time I got to the end of it, they were just really explaining just one technique of what they do. And I think most people are ignorant and thinking that the banks still have reserves, because we talk about the Reserve Bank all the time, and that those the credit they issue is based on deposits they have, which is not the case. They're writing that accounting entry to create credit out of nothing. At the same time, I was thinking, after reading it and thinking about today, it's astounding how many people have gone down the road of borrowing that money, or that taking that credit on and just taking it as a given way of life, rather than really considering, you know, you wouldn't make that, you know, some people don't even make that commitment in their marriage, the commitment they have to the bank. And, you know, if they're not willing to do that in matrimony or with their family, why would you do that with a group of strangers who, you know, you can safely assume they don't have your best interests in mind, and be tied to them? I actually think, and not going off topic, don't you find a lot of people are really quiet and not outgoing at the moment around Australia? And I think it's because they're all suffering mortgage fatigue and panic about what's around the corner. We're coming into Christmas time. This is a big stress on people. And if you try to ask people, you know, I don't think they even want to go to a birthday party, because that's extra expense. That they're watching every penny at the moment.
That's so true. And that's one thing. I mean, my brother's getting married this weekend, and it's a last minute marriage. You know, he wasn't going to get married last weekend, but I know exactly what you mean. It's like, oh, we've got to come up with an expense of a gift. And then, you know, I saw an email just before I came, you know, about the honeymoon. And you know, this is my theory about Australia. Well, this is my theory about money, right? In order to keep the system happening, we have to have something called inflation, because without inflation, we will end up having deflation. And as soon as we have deflation, the whole house of cards come crashing down in on itself. And in Australia, the easiest way to create inflation is to increase the mortgage rates, because in Australia, as opposed to America, our fixed rate mortgages only go for 3 years. And then after 3 years, we come off the mortgage rate, and then we're back onto the variable rates. So all of those people that 2 or 3 years ago thought, okay, I'm going to do the right thing, I'm going to set my mortgage at 1.89%, thinking that, okay, well, if interest rates do go up, they didn't think that they'll go up from 1.89% to almost 6%, you know, which is 3 times your paying. And that's the easiest way for the Federal Reserve to inspire the banks to actually take away our money and create the stress amongst us. What I want to do is, let's just go into, we'll start to analyze it a little bit, in the book it says, in section 51, subsection 12 and 13 of the Commonwealth Government Australian Constitution Act 1900, it gives the government the power to create money. So the question becomes, why does the government borrow money from the Federal Reserve or the Reserve Bank of Australia at interest, instead of creating its own interest-free money? Who wants to answer that one?
Because they can, Paul. They can. They have the mechanism for doing it. And this is what they're worried about in America and here. America and Australia are the most vigilant tax departments in the world for taxing their residents overseas. That the two main countries. And that mechanism of creating that debt and getting people in debt, we can't help it that a lot of the population are not very creative. in any country, they're only shown that you can get credit from the banks or a credit union or a financial institution. I don't want to get off topic and tell you a personal experience, but I have never borrowed money from a bank for real estate.
But you've figured out some other way to borrow money for property?
There are other, well, I didn't even borrow money. I'll give you a very clear-cut example. We made an agreement with the seller to pay him interest over a shorter period of time, which was 2 years, and we paid it off in 1 year, and the interest rate was not the market rate. It was a reasonable rate to give him security and a bonus for dealing with us directly. Now, there's a lot of people would not be courageous enough to even suggest that to a seller, much less know how to do it. But I created the document myself. We both signed it. He was happy. We were happy. And, you know, you have people in Australia at the moment who are clubbing together different houses on the same street and selling all the houses at the same time so they can sell the whole block. That shows some creativity. But there's somewhere along the line, everyone got sold the same story that you need to own your own house. I can remember in the 90s, I was in Hong Kong. There was a story about a man in America who realized by the time he needed care, he couldn't afford to pay for a retirement home. And bear in mind, Paul, that's buying a house because they need to buy their place in that. What he did instead was go to the travel lodge and rented a room for 20 years where he was basically getting the same level of care. People were coming in and changing the sheets every day. They were cleaning. He could go downstairs. He could get room service. There were security cameras everywhere if he fell down. Now, that's a creative example. Now, I don't think everybody in regional Australia would have that chance, but there's always another way to skin the cat, but something has gone wrong with our culture here because we are not America, we are Australia, but there are other ways to live. And, you know, there's no surprise. You don't have to live in a van and travel around everywhere. You just need to be a little bit more creative. And I think it comes back to, if you don't ask, you don't get. Talk to the seller. They may be more reasonable than the bank, and a contract is a contract, and you're probably better off to do things a different way.
So I agree with you. We do need to become a little bit more creative. I know that Robert Kiyosaki's got a beautiful book where he talks about how you can be creative with regards to creating property deals. But let's get back onto the banks, right? So in the book, it talks about the goldsmiths and the merchant bankers. And what happened is the townsfolk, as he called them, they would go to the goldsmiths and the goldsmiths would look after their money. And then the goldsmiths would realize that they didn't need to have the full 100% of the money. They only needed to hold on to 20% of the money. And they started giving out their banknotes. And this is where the first fraud or deception came into being, was that what they would then do is they would lend money to the townsfolk, right? But instead of getting them just to pay interest, they got to pay principal and interest. And this was when the money got transferred from the townsfolk who are going out there creating value to the bankers who basically aren't creating any value. What's your comments about that, Sally?
Yeah, so that's what I was going to say. It was just rewinding it back to why the banks are so bad. And I think that was the eye-opener in how it all started. It all started from exchange, goods and services, and then it became, rather than just exchange of a good for a good, it was a good for whatever it was that these goldsmiths had. Or did it start off with gold, was it, or a banknote? I can't remember.
Gold and silver. So initially, the initial the initial value was you had a gold piece, you would give it to the goldsmith to look after. The goldsmiths will then charge you to look after it, so they got some money. So that, I suppose, that's where they added value, was protecting or looking after your money. But as we know in America, banks go bankrupt.
Yeah, but I mean, this is where I'm finding fascinating is the actual inception of the whole deception. You know what I mean? It started so many years ago, and it was just because of this exchange, finding an easier way. So some people just would get some eggs, but then they'd exchange for a coin. Do you know what I mean? And that's where it all started. And then where I get a little bit lost, but where I follow it is it starts with the goldsmiths, and then it moves into the merchant bankers or something. And the story itself of it was just a simpler way for exchange, and then money was formed, and then the banks came into play. And I think that story to me is, if people understood how it all started and then where it is today, because we are sheep, basically. We're Australia has a lot of sheep. We just follow, and we're instilled with a lot of fear. So like Adrian was saying, it's the expectation that you just go and buy your own place and whatever. I mean, that's just how it is. We sort of have these limiting beliefs that we just have to follow suit. And, and that's why I like the being creative idea. But when we wind it back to why we're in this situation now and where the banks have got us by the short and curlies, it's just opening up this whole can of worms. But people need to know, because as like with everything, information is always there, but it's often hidden from us because of different people with different needs, shall we say, usually greed. So that's where I'm sitting, is like taking it back to understanding how it's got to the stage that we're at today.
Do you see how the deception actually happened? The deception was, instead of just lending at interest, they got you to pay back interest and principal. And that's how the value got transferred from the townspeople to these merchant bankers. Adrian, what's your view on that?
I think that, it's a very simple principle, interest, that, that's not the issue. What's the issue in the book is that using the certificate of title as security and transferring it to the bank. And the other thing that was astounding is that also your birth certificate can be considered as an asset. Those were new things I got from that book that I was not really aware of. And I can see that, we're not totally all sheep as much as I would say we are, because there are companies now that are offering a process for people to rent, and that rent goes towards purchasing the dwelling that they're in. And that's, come about because of the housing crisis. You have the other end, of that, where there are people that go beyond just owning their own house and owning their own land. And, the guys in Western Australia that set up their own little republic country in the middle of the state and be their own country with their own currency. What money was before was a token of exchange. And in fact, they talk about it in Roman times, because the Roman Empire covered so many nations with different cultures and different languages that coinage was invented by the Roman Empire so that their soldiers could visit brothels and pay for services. And the coins were marked with the different services that were on offer in the brothels in different countries, and they wouldn't have to speak the local language because the coins showed what they were getting. And you can imagine that probably happened in other countries as well. So adding the value of that to get the compound interest and the simple interest that people are repaying as well, which compounds as equally, if not more. The bigger issue is the ownership of the dwelling, with the contract and the bank taking ownership of the house. And then the description they show in the book of how to cancel that contract, that you're not paying off the house, you're not paying off the debt, you are being released from the debt, is the concept they're trying to bring across to people. and creating a paper trail between you and the bank so that when they try to take you to court, and this is an old technique, you know, whoever has the most paper in a courtroom is the winner, because they show the judge that you've done your research and you have enough material to argue the case if they're only standing there with a couple of sheets of paper the other side. So that is the bigger crime. It's not so much what the banks are doing to manipulate the supply of money and create the supply of money and credit. It's the double whammy of them also taking ownership effectively of the house with the certificate of title. We've lost you, Paul.
I must have coughed. So yeah, I want to explore that a little bit more, you know, because you were talking about the mortgage, and when we set up a mortgage, we actually signed 3 documents. You know, we have the certificate of title, which is who we own that certificate of title. We have the loan agreement, which is a promissory note to pay the, and this is coming back to what I was saying earlier on. You know, the goldsmiths got you to pay principal and interest. Well, that's what the loan agreement is doing. They've loaned you money and they're getting you to pay principal and interest. So you go pay twice as much money. And the mortgage is the document where if you don't pay, they can come and repossess you. So one of the things they do clearly say in the book is they do not have the firepower to argue this in court because the banks are so corrupt. So we have the three documents: a certificate of title, which is, if we have a look at the definition of money, it is money. If we have a look at a loan agreement, which is a promissory note, that is money as well. And then we have the mortgage. So if we have a look, if you go and you buy a house for $1 million, the house, you have the certificate of title. But who keeps the certificate of title? The bank. Why do they do that? Well, they do that so that they can use the factoring part, which is to create money. And remember, the goldsmiths held 10 to 20%. In Australia, the banks only have to have 10% actual deposits. So if you give them a certificate of title worth $1 million, they're going to go out and create $9 million as well. And then they'll lend that out as well. And then on top of that, the loan agreement is a promissory note, which is the same concept. So they'll now go create another $9 million, right? So for you buying a house, you've committed to paying almost twice as much to own that house in 30 years' time. And the bank's gone and created, in this case, $80 million. What do you say about that, Sally?
I just say I like to keep it simple. I get very bamboozled with all the detail of all of this, but I mean, it still comes back to, like Adrian was saying, the certificate of title, and the banks are having it. And I'm just, when it comes to all of this stuff, it gives me a headache. But bringing it back once again, the other thing I wanted to add in, and it's not related to this, but it is, when you were saying, the banks are making money, or, whoever makes the money, and then who are we paying the interest to? And where does that go? That goes overseas, doesn't it?
So this is a little bit down the track, but essentially, one of the reasons why at the beginning, I said in section 51, why does the government borrow money from the banking cartels, the Reserve Bank and the Federal Reserve in America? And the reason why is because that's where the money ends up. It actually ends up with the Reserve Bank, which is independent of the government. It's a private company. And this is the mechanism that they've used in order to enslave us into this debt society, this debt situation. Right? So that's where the money ends up going. Adrian, do you want to add anything to that?
I think also people should consider too that the 4 major banks in Australia have common owners. that
What do you
they're
mean by
not, well, they're not independent. Those corporations, the 4 banks, do share common owners and are overseas banks. So, you know, all their marketing for localization and, you know, telling people that their money's basically staying in the country is wrong too. Because, and, you know, they're part of a big thing to, you know, with everything you've discussed. Look at it. What are people thinking when they commit themselves to a bank that they think is in Australia and solely in Australia, when actually the bank that down the road that's maybe trying to get their business, they're both the same owners.
Well, exactly. That's the whole thing about it.
And
Yeah. What did you want to add something else, Adrian?
no, I think we should continue with what you've stated, but I think that is something people don't realize. They, like you said, Sally, it's bamboozling about the documentation and everything. And do you think anybody else is different? But I really, people don't read the documentation properly. They don't know what's behind it.
Yeah. I mean, people think banks are safe and a safe place to put your money, but it's not rightly so when you start digging deeper. And I mean, where is the safest place to put your money, or and to lend from?
Well, I think there's a lot of people have found out it isn't the safest place because there's 2 banks have been responsible for giving people's money away to scammers with not enough security.
So we're running out of time.
It's a massive.
And we've only touched the tip of the iceberg over here.
I think you go deeper and see what is left from what you wanted to also raise, Paul.
Oh, look, I mean, you know, there's a lender's mortgage insurance, which is another scam. You know, then we talk about the 2 types of relationships you can have with a bank: the depositor, borrower, or bailey bail. And then, I had a friend of mine who used his knowledge to go out and get credit card debt, and you'll max out the credit card. It's actually quite funny, but I don't think it's morally right. You'll max out the credit card, and then the bank would turn around to him and say, well, you owe us $20,000 on your credit card. And my friend would turn around and say, well, I'm happy to pay you that money back so long as you can prove to me that you loaned me the money in the first place. And the banks couldn't prove that. So that was his whole, and that's something that perhaps we can talk about maybe next week, if you guys want to come back next week, and we can talk about that next week. But we do have to get going because it's the middle of the day and we all have things to do. So thank you, Sally. Thank you, Adrian.
Oh, thank you.
Pleasure.
All about learning, right? We have to